Alright guys, welcome back. So in my last few videos, I was warning about a correction, or at least a pullback. Looks like today we got it. And literally called it yesterday. In the private group we were adding some short positions, and they have been working out very, very well. And hopefully this will continue. So, first of all, this is not financial advice. Consult your licensed financial advisor before doing anything. Stocks, anything. Extremely volatile, extremely risky. Do not invest in anything you're not willing to lose or lose sleep over. You consult your licensed financial advisor before doing anything. And I mean all of that. Anyways. So let's do some charts at first, and then I'll talk about the news and what's going on. Well, yesterday, I'll talk about this for a second. So the FOMC meeting was yesterday, and I posted the live feed in the newsroom. Links are below for the newsroom. That's not it. Here's the newsroom. Alright, so I also posted we're gonna get a correction in the newsroom. Where is it? Somewhere in here. I've been posting a lot lately. Doesn't matter. Alright. Also follow me on my Twitter. I've been pretty active there lately. There's a lot going on. Okay, so here's the... Okay, let me talk about Powell. Well, basically what he said was they're going to keep rates at 0 until like 2022, which was actually pretty surprising. He was very dovish, and he even admitted that the economy's not going to recover for a while and we're in serious trouble. What blows my mind is that Orange Man keeps like blaming the Fed that they're not going to negative rates. If they go to negative rates, it blows up the entire market. Like, it'll probably happen very quickly, to be honest, because as a world reserve currency, and with the amount of debt that's been accumulated in the bond market, you can't go to negative rates and all the US banks go under. And it's weird because the stock market wants it as well. It's not going to help. It's not going to help stocks, and really it's not going to help the companies either. So that's it's completely insane. I mean, we live in a very clownish world, if you haven't noticed already, with everything going on. I mean, this is Banana Republic. So, well, that's pretty much it for the FOMC. I mean, there's this one part where, how can he help, or is the central bank at fault for wealth inequality and the social classes? Yeah, in a way it is. It really is, because all of that, stimulus and bailouts, yeah, it keeps the economy from going into a Great Depression, but what it really does is all the inflation, it gets piled into asset classes and stocks, and the wealthy mainly own the stocks and the companies, and in the meantime everyone else on Main Street has to suffer inflation, right? But the reason this is all allowed is because this is how the government's funded. So, and not just that, Wall Street pays the highest in taxes, in corporations as well, which is also why the U.S. isn't competitive on a global scale, and a lot of the jobs left the country because the high, and regulations. Let's look at the... Well, here's S&P for today. Here's a snapshot. It actually started selling off yesterday and the day before. And last week, I started putting on shorts. I put it in the private group, and then I went really heavy yesterday. And then I was talking about the correction coming last week, my last video, right? And some asked in the comment sections like, "Oh, watch this guy," and blah blah blah. Listen, I am probably one in very few people on YouTube actually make money off of the market and don't rely on advertising. So a lot of those other tubers, if they get 10,000 views a day or 20,000, that's where they're making most of their money. I really don't care about, ad revenue. I make like, I don't know, $15 a month. All right, so, and the only reason I have the ads is so I get put into the search. You're more likely to find my videos. But not anymore. I mean, at this point, it's like my videos are just buried and they will never be found. That's why you have to share my videos if you want me to keep making videos, because I'm done growing. It's over. If anything, people are getting removed. So it is what it is. At some point, it's just going to be everyone, out for yourself, for your own. You'll be on your own. And I'll be fine because I don't have to be public or anything. So let's take a look at some more charts. Actually, let's look at the whole markets view that I have here. We didn't just short, and we shorted with inverse ETFs, but yesterday I mainly bought VIX ETF, which is leverage, and it's up like hundreds and hundreds of percent. Especially if you bought with options, but that was a great trade, really great. I mean, this is just the action for today. Look at this. Just exploded. Went up 63%. Now it's a little bit lower right before the close, but I don't think this correction is over. Like I said, a lot of Wall Street guys are gonna probably take a break, go on a long vacation this month, next month, because it's been very stressful probably for all of them for this first half a year. And the smart money, the big cats, the big whales, they're going to they're not that dumb. They're going to stand out of the way, and they're just going to go into cash and probably sit out the summer, maybe even until the election. And then what happens is, if they're all going to go to cash, I mean, who's there to buy the dips in the market for equities? So this could turn into a significant correction. It really can, I believe. Besides the fact, and I was tweeting, this is what I tweeted. I don't want to go to it. So it's not. Did I not put in the newsroom? Anyway, 6 days ago I tweeted. Twatted. NASDAQ is hitting all-time highs. We have 40 plus. Right now it's known there's 42 million unemployed, and it's still climbing. I said it's going to end at 60. And not end totally. Who knows how bad it could really get. But by the year's end. Or maybe by next year, by 2021. Because a lot of people are getting rehired right now. Eventually, they're going to get fired again because business isn't going to pick up like people are expecting. And and they have to do it to get the stimulus loan. They have to rehire their employees. But once they've rehired them for like 3 or 4 months or whatever, then they can finally let them go and then still keep those loans, which turn into grants. Anyways, I was saying that the NASDAQ just hit all-time highs. Wow, we have 40 plus million unemployed. 40% small businesses are gone, who are the majority of employers. And what else? Record debt, and I said something else. Oh, I forgot. I don't know. Go to my Twitter. And it made no sense, right? Which was true. And all these Robinhood traders and the Barstools guy, Dave, which I like that guy. He's funny and he's hilarious and brings up good points. But he just started trading, and it's hilarious watching noobs. And yeah, he has a ton of money, but that's from a business he owned. But I also tweeted, this is the perfect contrarian right here. Because he's like, the market always goes up. I'm like, all right, we'll see. So, here's what else is interesting. The dollar. I talked about this. It didn't rally. It did not rally while this sell-off happened today. And it was a significant sell-off. The Dow fell like 1,800 points. Which is a huge drop. How much did it fall? What did it close on, at least? Well, I can't see. I don't know. Last time I saw, the worst I saw it was 1,800. Futures are green right now, though. But nothing significant. This could turn red overnight and open red tomorrow. Like, no problem. Alright, so, but what's interesting to see is the last time the market fell, the dollar rallied. But this time it's not. It's like a safe haven thing. A knee-jerk safe haven reaction. And that might be because people are starting to realize, like, every time the market falls, Mnuchin comes out and says, oh, we'll get another trillion. Like, at some point, you realize every time the market falls, the Fed's going to come out and they're just going to do another stimulus and just print funny money. See, he today announced, as the market's falling, we're prepared to go back to Congress to ask for more money. And then what else did he say? That another trillion, which isn't enough. And like I said, to keep the market where it's at, or to even make it go back up, it's going to take more and more and more every time, which is inevitably impossible. Because at some point, the dollar itself is going to crack and break because of that. I was also talking, look at this chart. Total employment in the U.S. economy. This is out of the population. It fell to 133 million. Well, there's 330 million. So it's like, what? 28% of the population still working? That's it. The total people. If that doesn't scare the shit out of you, it should. So world stocks is this green chart, and then green line, and the red line is world central banks' balance sheets. Direct correlation. Which, in the end, they're going to all keep printing all around the world until it's literally toilet paper. Their currencies. They have no choice. Because they're not going to default on all the liabilities and all the promises they made to the people, because then the pitchforks and torches come out. So what they would rather do, of course, is to slowly devalue their currencies, and that's why they all take turns to, because if they're, I explained this in my last video, they take turns. If they do take turns, then no one currency will fall rapidly. It just happens with time, and that's the game plan. Will it fail at some point? Maybe. It's when the bond market just says enough is enough, but don't know when that's going to be. It'll happen just like maybe on a weekend. And then when that happens, there's nowhere to hide except metals. And maybe some other commodities, energy. We have some good energy stocks. I had a great trade. I'll show you guys that. U.S. bankruptcy soar 48% in May, most since financial crisis. Yeah, I mean, the economy's complete crap. And the market for the past 2 months has been rallying near all-time highs. The Fang index and the NASDAQ hit all-time highs and made new all-time highs. It's like drinking the hopium to the point you're like completely delusionally hammered. And all of these Robinhood traders, millennials, and gamblers, people used to bet on sports, just started trading with their stimulus checks, and now they all gave their stimulus check to me and my private members who follow my trades. Not all of them do that. Some of them just buy mining stocks and hold them long term, which evidently, eventually, all this money is going to go there. All you have to do is have some patience. And I'll talk about mining stocks on gold and silver. So, I mean, my indicators were telling me that we're literally going to have a correction this week, and it just played out perfect. It was easy. This time it was very easy. That's why this time we had some very profitable... I mean, last March we had great profitable trades, but this was... For a one-day event, super profitable. Yeah, I mean, it was short NASDAQ, Russell. Check out the Fang index. This is why there's more pain to come, I believe. So, this is how they manipulate the market higher. If you want to be conspiratorial and put on tinfoil hat. BlackRock goes and buys Fang index, which pulls everything up higher because everything's in index funds, and the largest weighted holdings are the Fang stocks, and all you got to do is like buy 5 or 8 stocks, and if they go higher, it pulls everything up with it. But it's a double-edged sword, right? Because if the Fangs fall, everything's gonna like fall even more. So let's take a look at the daily chart. So my indicator is money, man. I mean, it's made things perfect buying opportunities, perfect selling opportunities. Like my $10 a month for the private members pays for itself. I mean, it's literally like I'm giving it, like it's way too cheap. I have to raise it at least to $15 a month because this is ridiculous. My trades are changing lives. All right. And I'm not being cocky. It's just I've been doing really well. So this is the extent of the Fang index falling, which is nothing. It's a little drop compared to the other indices. The Dow and the S&P look way worse. It's about a 5% drop. All right, it is a significant drop. But what I'm trying to tell you is, from its previous low, from the March low, it's got a long way to go. So this thing rallied 70% from its low in from March 20th. And now it's fallen total 5%. But and then this was its previous high in 2019. And this was bubble territory then. And this damn thing made a new all-time high. It just blows my freaking mind. with everything we know, right? With unemployment, with all the debt uh, on the corporate balance sheets, not mentioning the corporate buybacks, and I mean it's just absolutely insane. So just a decent pullback. I would like to see this thing pull back minimum. Minimum. All right. And this is learning how to trade. So let me show you guys some stuff. I mean, let's get a pullback. And the reason I'm taking this down to the previous low in March is because I know the Fed's going to step in and not allow it to make a new low below this. Because if they do, then shit really does hit the fan. And they can't reinflate this bubble. If it goes below the last low, which on the Fang index is like 2,458, then I don't know. Then it's over. Party's really over forever. Like not forever, but for probably our lifetimes. I don't know. Um, I don't want to say that either, but for a very very long time. So a pullback wouldn't surprise me. At least minimum. This is like the best case scenario to the 61.8, which is right above the 100-day moving average, right? On the Fang index. Which means as the Fang index goes down to the 61.8 fib retracement, the rest of the market's going to keep falling as well. And yeah, the market could recover from here and they could blow the bubble even bigger. Although Q2 earnings are going to come out, and that's what's really scary. And they're going to come out around, I'm not exactly sure, don't quote me, but sometime in July, late July, right? Where is it? Oh. So we have a long time though until then. Huh. And that could actually make the market go further, make it fall further once Q2 earnings come out. Because they're going to be bad, and there's no way they could fudge them. Now, a correction, though, could take us easily to the 38.2 fib retracement, or a little bit above it, let's say. Because by then, the Fed's really going to step in. And I don't know when they will step in. I really don't. The Fed will either step in somewhere around here, or here. But there's no way they're going to let it go. I mean, it should go back to my blue equilibrium line, but if you actually, you kind of have to anticipate the way the trend goes, right? It goes up on a slope. So I'm just going to draw it. So yeah, they're going to step in somewhere around here and here. If you're looking at the Fang index, right? So on the Fang index, somewhere around 3,200 or 3,500, somewhere around here. I have a feeling they're very panicky and scared. And they might step in too early. And then they'll get the market going back up. Right? Maybe it'll like kind of be like a dead cat bounce. But the problem is, then Q2 earnings come out. And that's going to cause another sell-off. And then what are they going to do again, right? Are they going to just do another one? Another round? More stimulus? That's like 2 more stimuluses by the end of July going into September. So I'm kind of just drawing arrows here, trying to brainstorm how this is going to play out for this summer. At the end of the day, all you need to really know is, if you're not really a trader, all you need to know is gold and silver is only going to go up, and the mining stocks are going to explode. Now, yes, some of the mining stocks did sell off a little bit today, and that's basically the same thing that happened in March. Margin calls, because the velocity of the drop in equities. So if the stock market's really dropping really fast and a lot of people's accounts, trading accounts, start blowing up, and their accounts start going negative because they're leveraged up, and then their mining stocks, they have to sell them to get their accounts out of negative territory, out of a margin call. So then they kind of have to liquidate their whole account, and then they sell everything. They throw the baby out with the bathwater, which includes the mining stocks. And that's why you see mining stocks drop. And maybe some traders panicked and they're like, oh crap, it's going to happen again, what happened in March. But listen, even if the market keeps dropping and it's really bad, just like it did in March, the mining stocks are going to hold up better than the rest of the market. And then they're going to do what they did last time. So let me show you. I have to find it. Give me a second. I have 100 windows open. So let's go to a daily. All right. So here's GDX, an index ETF of the major mining stocks, right? I'm not saying you should buy this or anything. There's way better ETFs. That's for private members. This was okay. So GDX had an all-time, well, not an all-time high, but it was pretty high, right? It was up at around $31, which is still undervalued. And then it crashed with the rest of the market back in March, right? And then right around here, I'm screaming and making videos nonstop, even tweeting, buy the effing dip on the mining stocks, because they're going to rebound. And then they rebound instantly. And now they made it an even higher high. And this all happened within, look how fast this happened. This is a weekly chart. The last chart was a daily. So this is a weekly chart. So the stocks fell, the mining stocks fell for what? 3 weeks? And everyone's freaking out and panicking. And I'm like, listen, everyone, calm down. Just hold. You'll be fine. It's too late to sell anyways. It happened overnight, basically. Just hold on. They will rebound. If anything, if you have extra powder, you know, you always have to have powder in your trading account or any account. You always have extra cash for opportunities, or have a savings account, or literally stick cash under a mattress or whatever, hide it. And that way it takes you a couple days to get it into your trading account or wherever you want to get it to. And then because it takes you a couple days, you're not going to just instantly grab it and trade it or whatever. And then you could buy the dip and get that awesome buying opportunity that you would have never been able to get if you didn't have some extra cash or savings in your back pocket, you know, tucked away for these opportunities. When I have huge winning trades, I always take some of that cash and I'll put it in another trading account where I'm not going to touch it because it takes like a day or two to transfer over. And then when I have a huge opportunity, then I transfer that over and I can take advantage of that opportunity. But rule of thumb is you have a trading account or account that you trade with and also have long-term holdings, right? So 70% is long hold For me, it's for mining stocks. I'm not saying that's what you should do. I'm just telling you what I'm doing. And then I trade like 10% of it. Then like another 20% is in cash. Or maybe it changes a little bit. Maybe I'm trading 20% of it. Or sometimes I'm just trading 5% of it. But I always keep a minimum of 10% of my account. So if I have $100,000 in my account, it's worth $100,000. I always maintain a 10% cash for opportunities and just in case my leverage ETFs, start going negative because I screwed up, right? Now, sometimes I know that my leverage ETFs are going to go down, but I have so much cash, it's fine. I'm not worried. Anyways, so here's GDX, right? The ETF of the large mining stocks. And here it dumped, right? Look at the rebound, how fast it happened. Within 1, 2, 3, 4, 5, 6, 7. So within 2 months, it's making new highs. Within 2 months and 2 weeks, it hit all-time highs within the past 8 years. 8 years. All right. Now, it's still nothing compared to its previous all-time highs. Just want to show you again real quick. Its previous all-time high was at $67. Gold right now is very close to all-time highs. It's this blue line. This is gold. This blue line. Look how close it is. And the mining stocks are priced literally at, oh my god. Actually, looking at this, I just realized something. This is amazing. This is insane. Let me turn, okay, this is my LCD. Let me make this orange, gold. Okay. Let me make this a little thicker so you can see it easier. Alright. I just realized something. I can't believe I didn't realize this earlier. You know, I've been saying, guys, relax. Mining stocks are priced at $1,300 gold an ounce. They're not. Look at this. This is insane. I mean, historically, if you take this. Okay, you see where my purple line is? Okay, gold. This is the price of gold, the orange line, right? This is the price of gold, 1 ounce. And this isn't even silver. Silver is way better looking if I wanted to compare this. But look at this. Okay, so on the left here, so x-axis, y-axis, and the left here, where the purple line is, that's, let's round it up. It's 1,093. So the gold price, oh my god, this is insane. So the mining stocks right now are priced at pretty much $1,100 an ounce gold. So $1,100 an ounce gold. That's where currently today is where the mining stocks are priced at. On average. There's always a few mining stocks that have been doing really good and they're outliers. But for the most part, like over probably 90% of them. So right now, gold mining stocks are priced at $1,100 an ounce gold. That's insane. And gold is going to probably make, not, I can't say 100%, but I am very confident, personally. I believe we're going to make new all-time highs this summer, and it's going to be like above $2,000 an ounce gold. And then silver is going to play catch-up that entire time. So a mining stock which mainly mines gold and silver is going to explode, I'm telling you guys. The only reason the mining stocks are lagging so much to the price of gold is because every idiot on Wall Street and every retail investor has been chasing the stock market and the Fang stocks and all that crap into bubble lolly land territory. La La Land territory. That's why. And the smart money has already been in the mining sector because that's the only reason it's been going up. But at some point, this is when I think everyone's going to realize it. It'll be very soon. It'll start with Q2 earnings. It will really pick up during Q3 earnings for the mining stocks. Why? Because they're going to have the best earnings in the entire like Wall Street equities markets. All right? At that point, you can't ignore them. And then everyone's going to jump on the bandwagon. And, you know, mainstream financial media, all of them, they ignore the mining stocks. There's always a few guys every day who says, no, I'm buying more mining stocks. But everyone's like ignoring them for some reason. They have been mentioning them lately. But once the retail investor and the idiots on Reddit and the other chat boards and message boards, FinTwit, and, you know, Robinhood investors realize that that's where you're going to get rich. The Moon Boys, once they show up, they always show up too late to the game, but, you know, some of them are going to start showing up pretty soon, I believe. When Barstool Sports Davey dude starts talking about them. And, you know, you're going to think, well, to be a contrarian, that's when you start taking profits. Not really, because people don't realize how undervalued they really are. I imagine when gold does this, and by the way, the price of 1 ounce should be above 3,000 right now. Now I get it, it's manipulated, but the manipulation is going to break. It's already sort of breaking. They can't really do much because every dip is bought, and they can't dump the price every time there's a good opportunity to dump it like they used to, because every dip is being bought in gold. Let's talk about some, well, I'll look at the gold chart for a second. This is what I was already, I added some drawings for private members. This is a daily. Let's start with the monthly. And the reason I don't look at silver is because I don't want to make a 2-hour long video. Silver, once it gets above 20 bucks, it's going to the moon. Or it's going to try to get to its previous all-time high, which is like around 50 bucks. Right now it's at like $18 or $19 an ounce for silver. We're on a 4 count out of 9 on the monthly. So we could have possibly 5, 6, 7, 8, 9, 5 more months of upside. And the oscillators could run hot for quite some time. If you look at the prior bull market, even on the dips on the RSI and all that, the price kept going higher. These oscillators aren't like always right. And they could stay overextended to the upside or the downside longer than anyone would think, right? Because of the fundamentals and reality of the situation in the macroeconomic world. Plus, the MACD actually has a lot to run higher. Alright, let's go to a weekly. I need a sip of water. Energy drink. I had a nice buying opportunity. My indicator even told me to buy here. Now, this looks pretty much like a bull flag now, or a bullish pennant already. Oscillator, so the MACD is already crossed. So that's a good sign because it might reverse and go higher. Let's go to a daily. Or actually, let's go to a 3-day real quick. So when my candlesticks are blue, that signals a buying opportunity. Now, gold hasn't really sold off during this crash today. The mining stocks did, and that's because of margin call. This is a great dip buying opportunity. Now, they didn't like sell off by a lot, but 5% here, 8% there, and it's a great buying opportunity in my opinion. Now, can they fall some more? Yes. If the stock market keeps falling this quickly, yeah, mining stocks could fall some more. I don't know if it's... See, I don't know the velocity of the correction in equities. I don't know how fast they're going to fall. I would say wait to see what happens on the open. And if stocks keep falling and falling, like I'm talking about the Fang index and NASDAQ and S&P and the Dow, if they keep falling like 2,000 points or 1,000 points every day for the next like week, then yeah, miners are probably going to get hit more. But again, they're not going to fall as much as the broader market. And then when they rebound, they're going to rebound really fast. So dollar cost averaging into the dip or the pullback in mining stocks as everyone gets their margin calls might be a good strategy if you're looking to accumulate more mining shares. By the way, we have a lot of mining shares that have gone up like 6, 8x, 10x. Alright, so here's the daily chart on gold. Look at this. This is I like seeing this. This is consolidation. It's just winding up. It's like a spring just winding up, ready to pop and go higher. So it's in this range. And some might say, yeah, but it could break down as well. But it won't, because they have to save the market, and they're going to do more stimulus. That's why it's not going to. And every time they smash it, I mean, it comes right back up. Oh yeah, and once the price gets above 1,800 and closes the week over 1,800, or even a day, let's say, but a week. I'd like to see it above 1,800 for a week. Once gold does that, so my green arrow to major resistance. Now, yeah, gold could actually do this. It's going to rally up, right? Hit major resistance, pull back a little bit, maybe back to 1760, 50, whatever. And then, do this and then do it again, break out. It could do one of those, or it could stay above 1,800 and just kind of retest 1,800, not really break below it, and then shoot higher. So one of these, right? But listen, I mean, once it's above 1,800 for a week and starts going higher, like let's say once it gets past like 1,860, it might just keep running and running and running. And what I mean by that is, let me take this to a weekly so it's easier to see. Or let me do a monthly actually. Then then sky's the limit. Once it gets above 1,800 and starts rallying again, like, it could have a huge move high really, really fast. Like, you're not going to believe it. And there'll probably be some sort of catalyst for that, but it's going to do it. And believe me, when gold gets somewhere up here, and that's not even at 3,000 or 5,000, where it's going to go eventually. But once it gets up here, your window of opportunity to buy mining shares for speculative purposes and to maybe change your life with the wealth transfer, the window of opportunity is gone for the huge life-changing moves that'll happen like that. Okay? So I'm hoping that's what's going to happen in the next 5 months. In the next 5 months, I hope we get a huge breakout, a whole 9 count to like 2,600 or 2,700. I would be happy with 2,300, because imagine what the mining stocks will do. And then, actually, believe it or not, I wish I didn't draw all this. Okay, let me bring it back to the monthly. Just wanted to remove all of that. Give me a second. Alright, so this is what I really want to happen. A lot of people, like a lot of the old school gold bugs, they want this to be an orderly climb because they can't handle volatility. Let's just say most of them really aren't traders. They don't want to see this. Like a straight shot up, like a melt up this summer into fall. They don't want to see that. And why is that? Because when you do see something like this, you're going to get you'll get a huge correction. Then it'll do something like this. Probably not all the way back to, but I'm just drawing, guys. All right, don't take this like too seriously. It'll do one of these. Like maybe back to 2000. Then it'll correct because it'll kind of turn, because it's ran up too much too fast. Like we just saw in the NASDAQ and in the markets, right? And equities. Then it'll have a huge correction back to like 2000 or something. Or maybe retest the all-time high of like 19. That's probably what it'll do. So if it shoots up this summer, right? I hope it really shoots up really high. Suckers everyone in. Gold. And then the mining stocks will do things you've never thought possible. Then it'll have a correction. And it'll probably retest the previous all-time high in 2011, right? And this would be perfect, because we will be looking to take profits, right, up here, and then we'll be sitting on enormous gains, and then we could buy the dip down here, and then for the next 3 years or whatever, it's just gonna do it again, right? It'll head for 3,000, 5,000, whatever. Depends how fast and how bad things really get, but probably going to get really bad and things are going to get crazy. So that would be great. This is what I really want to happen this year. Will it? I hope so. My track record is pretty good. All right, let's talk about some stories, I guess, and then. So bad things happen when markets front run the economy. I haven't read this, but the title caught my eye. Let's just read some of the bolded. But it will become a lot more problematic should finances front running of the economy not be validated by strong growth that is also inclusive and sustainable. Right, so the market just priced in that the economy is going to rebound and be even stronger than it was in 2019. Even after fact, like 40 plus million people lost their jobs and like 40% of businesses, small businesses went under. I mean, that's how delusional people are, or insane, or greedy, or speculative because of all the Fed printed hot money, right? So, that's a good point. But the whole process got carried away, resulting in excessive and unsustainable risk taking by borrowers and lenders. Yeah, and all these companies started rebuying their stocks again after all this. It's unbelievable. It's unbelievable how stupid people are. These boomers, man, I don't know. But exiting this regime proved difficult in the post-crisis years. Yeah, I mean, people have been conditioned to think everything's always going to be okay, especially in the US. And listen, there's people in the markets, like a lot of people like in their 30s, let's say 40s and down, who've never really seen a real bear market. Now, 2008 was bad, but it was sort of quick. That as well. I don't consider that the 2008 2009 recession really all that bad for the market. I mean, it was bad. It was really bad. But it was quick. And there's people right now trading, and a lot of people on Wall Street who are young, and they were just getting into the market, or they haven't seen a real recession like 2008-9. They weren't there for the dot-com or the early 2000s. What else? The immediate impact on financial markets has been beneficial and has extended well beyond remarkable recovery in stocks, and that drove the Nasdaq Composite through the 10,000 mark for the first time on Tuesday. This was last Tuesday, or this week Tuesday. This huge rise in financial leverage will prove advisable and sustainable if, and only if, economic growth picks up quickly and validates it. Which it won't, because we haven't even had Q2 earnings. And when Q2 earnings come out, it's going to be like a reality check for Wall Street. And I think a lot of people know that it's going to be bad, and that's why they're taking profits right now and probably going on an extended vacation. So, yeah. I mean, seeing this correction coming, you don't have to be a genius. I don't know. But then again, people are this stupid. There will be widespread debt restructurings too and disorderly non-payments. Yeah, guys, defaults are coming for businesses. And Chapter 11s. Like Hertz. By the way, funny story in the private group. For fun, like a lottery ticket and like trade, I'm like, listen guys, I'm gonna throw a couple $100, some pocket change on Hertz, and I'm gonna leverage it, with an option. And I said, this is a gamble, super high risk gamble. I'm just gonna throw it on here, and we did it right before all the Robinhood millennial degenerate gamblers started running it up. And I'm like, I think these idiots are actually going to buy this, even though the company went bankrupt. And you never know. What if they come out of bankruptcy? Then the damn thing will rally like you've never seen it rally before. So we bought it, and it really did go up like 800,000%. And we took profits right before I told the guys to take profits on it. They took profits. I didn't take profits. I wanted to wait one more day, and then the news came out that they were going to get delisted. But I still grabbed like 400% gain, although the thing was up like 1200. So that was fun. Anyways, but that's a gamble, right? That's a speculative bet based off of a bigger fool, right? And I'm just giving you guys an example of some of the dumb shit we do. But that was pocket change, right? Like throwing like $20 or $50 or something, seeing if it hits, and maybe you get a nice little 10x. That's actually not investing. That's called gambling. I should have shorted it though, but whatever. It happened quickly. This huge rise in financial leverage will prove. Okay. Lastly, companies need to resist the temptation to use debt for more financial engineering and higher executive pay. All right, that was it. Yeah, honestly, I mean, what we saw in the past 2 months was very reminiscent of like the 1999 .com bubble right before it burst. Like fundamentals don't matter, put blinders on, and everyone's just gambling for a living because there are no real jobs left. Insanity. And the Fed's got her back. Listen, guys, I don't fight the Fed. That's why I hold a lot of mining stocks. Because those are just going to go up. Even if they save the market, even if they make the market go higher and higher, hit new all-time highs, it doesn't matter. My gains in mining stocks are going to be much higher. Adjusted for inflation, obviously. Stocks crash. Hit by biggest sell program on record. Retail favorites implode. That's crazy. This was the highest tick on record. So that's how big this dump was. Volatility. The volatility, I mean, I bought, one of these VIX ETFs, and that thing soared like 70% in one day. And then, you buy an option. Anyways, while many investors had been, by the way, I'm telling you right now, if you don't have like 6+ years experience, profitable 6 years, meaning you are profitable after trading for 6 years actively, or at least part-time, or you've been doing it a lot as a hobby, like you know what you're doing, do not get a margin account, do not trade leverage ETFs, and do not trade options. You will lose all your money. That's just fact. Okay? I mean, there is no get rich quick. You have to pay your dues. You have to have years of experience. You have to know how to manage money. Because most of the time what happens is a lot of people do this. They don't know how to manage money. They don't know how to manage position sizing. They leverage up. They don't know how it works. You don't understand that your account could go negative. You could end up owning your brokerage account money. You could wipe out your account really quick. If literally, like, you need years and years and years of experience of being profitable, and you have to grow your account to a certain size for you to be even able to do this. For one, you can't even day trade if you don't have 25 G's in your trading account. Two, like, I'm dead serious. Do not trade leverage ETFs and options if you don't have 6 years plus trading experience profitably. Because it's not going to end well. And I'm telling you, that is, I know everyone sees like other people making a lot of money doing that, but the only way you get to keep the money is if you know how to manage risk. One of the golden rules: you do not trade more than 1% on any given trade. Max is 1%. If you have an account that's $100,000 worth, you're only trading $1,000 max. If you have an account that's worth 10 grand, then you're really only trading $100. Well, I'm not gonna get rich trading 100. Yeah, you will. It's not gonna happen overnight. If you trade $1,000 with a $10,000 account, you only have to screw up a few times, and your entire account is wiped out, clean, gone, and then you're like mentally, like you don't want to do that. You don't want to wipe yourself out. The reason you trade only 1% max of your account is because you can't have. Not every trade could ever be a winning trade. You're human. You can't. Do you really think every trade you ever make is going to make you money? It's not. You're like a rock star if you're right 70% of the time. Now listen, you could have 10 trades, 8 of them you lose all your money on 8 of those trades, but you actually come out on top profitable if 2 of them made you money. If you know how to let your winners ride and cut your losers short, right? Well, you wouldn't be cutting your losers short if you lost all your money on the 8 trades. But, I mean, that's for a separate video. I should be making that for private members, which I have, but I have to keep making these videos. Anyways, moral of the story is do not open a margin account. Do not take on any leverage. If you do, you're going to get wrecked. Buying leveraged ETFs, you're probably going to get wrecked. Holding mining stocks for the next 3 years will be more than enough for you. All right. You can trade without leverage. And then after you've been doing that for a couple of years and you get the swing of things, and because for one, you can't emotionally handle if you literally don't have many years of experience. One, you're emotional wreck. 2, you're emotional wreck. 3, you're probably putting on trades that are too big. 2, you're not managing risk properly. You're not hedging. 3, you don't have enough cash in your account just in case something goes wrong, like that's leverage. And 4, you don't even realize your account could go negative. And I've talked about this numerous times, but I have to keep talking about this for new people. Because nobody else tells you this, apparently. Alright, what else is going on? Jobless claims continue to surge. By the way, the CPI came out, and for some reason it wasn't like higher. I mean, it's higher, but it didn't continue to rise, and I just do not trust those numbers. But maybe people are buying less things because they're more worried about the future. Jobless claims continue to surge. Initial jobless claims. I mean, it's falling, obviously, but despite the last week's hope restoring non-farm payrolls recovery, in the last week, 1.5 million more Americans filed for unemployment benefits for the first time, slightly better than the 1.55 million expected. Okay, so whatever. It's 1.54. I mean, that's a week. That's a week. You guys have to understand that normally 1.5 million during an expansion is like, I mean, that these are the types of things you see every quarter during a recession, not every week. And a quarter is what? 4 months. Let's put that in the comparison. Do not play this. Do not play this. All right. So that brings the 12-week total to 44 million. It's insane. I mean, this is Great Depression. Worse of Great Depression, really. Percentage-wise of the population, because I know the population is larger than it used to be, like back in 1929 and 30 and 31, 32. But percentage-wise, we're already higher, and it happened quicker. And the Great Depression was deflationary. People actually had food, or were able to afford food. This time around, I don't know what's going to happen once inflation takes off. Yeah. All right. What else? What is my video at? Holy crap, I'm over an hour. That sucks. Nobody's gonna watch this. If you've made it this far, I thank you, first of all, and good for you. Good for you. I'm gonna end it here. I don't see anything else. By the way, just wait till the market starts pricing in Orange Man might not get reelected. The market's gonna dump just on that. So, and as we get closer this fall, people are gonna get more nervous, right? And that's just fact. Maybe people will not buy the dip. So this correction, this pullback might turn into something more. I do think that they're going to step in and stop it, and the Fed's going to do whatever it can, but at the same time, you never know. You never really know. Yeah, I mean, this title right here, absolutely 100% right. And this title, absolutely right. I've said that. So, all right, guys. Go to my website. If you're not in the private group, it should pay for itself. It already has for everyone who joined, and you know. I'll see you guys next time. Share my videos. Only way this will grow, and I'll continue to do this. What else? I don't really know. I'm probably forgetting something important. I forget something important every video. Once I turn off the recorder, I'm like, crap, I forgot to mention that. All right, take care, everyone.